TMT stock market strategy video for Friday, June 3rd. Today is all about non-farm payroll numbers that come out in about an hour or so. A little bit of history. Numbers are good or bad. It doesn't matter. It's how the market participants react to those numbers. And let's give you an example. If they like the numbers and they like to run up the market as they have been in the last 6 trading days, we're already in an overbought state in the market in 6 days, guys. Can you imagine? From going oversold to overbought in 6 days. That's why the market is broken. The algorithms and HFT is just taking the market hostage. It's just insane. Straight up, gap up every single day with no pullback. It's just amazing. And there's absolutely no fundamental reason why the markets are up at these lofty levels, and why they're buying it up at these levels. But it's not what we think. It's how the markets react and how we take advantage of that trend. Okay. But usually if we get a good number and or a bad number, we usually fade the first move. And then the next couple of days, if the number's good and they want to rally them, we usually get a market sell-off in the next week or so. And that's what I really am anticipating. Personally, I have not seen a 5-day rip like this going into a holiday week, a long weekend. Usually the bigger players would take a risk off, take some money off the table, but gap up every single day. If you looked at it, it's pretty amazing stuff. But let's get right into it. I want to show you what I've been showing you, and again, trend traders follow the trend. That's the bottom line. You cannot do anything other than that if you're trading, because the algorithms will just get in front of you, and if you're going the opposite way, you're going to get your head ripped off. Follow the trend, but you have to be aware of what's going on. Here's the VIX. 12.5 is really a big level of support. I don't believe that's even going to get breached, but if it does break down from here, look for that buy signal and then close back into the band for a rip higher. I do believe the VIX is ready to explode higher. There are a ton of shorts in the VIX. I mean a ton of shorts, guys. Retail shorts for no matter. We looked at commitment trader reports. The VIX is heavily shorted by the retail public, and a lot of longs from the commercials and the producers that need the VIX for hedging and volatility. Okay, so keep in mind it could happen. It might take a week. Might take, who knows? We don't know the timing, but this is something that you have to watch. Here's the NAMO, which is the Nasdaq McClellan oscillator. It's already starting to read an overbought state. Now we're not quite there yet, but we're almost at 50. Okay, another push up today will be in an overbought state. Maybe Monday into Tuesday. That's it. We're going to be into an overbought state even more. And now remember, overbought is not a sell signal, but this is insane. 6-7 trading days from down here to here already, and now you're already beginning to be overbought. The McClellan oscillator isn't as much because of Apple. Apple is heavily weighted in the Dow as well, as you know, many other ETFs. But it's right around 32, so it has a little bit of ways to go before it becomes overbought. But something that you cannot deny. You got to be careful if you guys are holding positions, swing traders. Be careful, because you could wake up at any given moment and the market would be down 30, 40 handles, and that was really the top, and the market starts to sell off pretty hard. So just something to think about. Let's go right into the indexes. Believe it or not, guys, it's been a sleeper for the last week. Last weekend of May, the first week of June, really hasn't been anything to write home about as far as day trading is concerned. We did get an outside push lower. That's going to be the area here, 211. Take that area out, hold, give it a 2-day close, and then we should go higher. I'm looking for a pop-up, capitulatory top, get everybody long, and then the market sell off from there. Right now, we're barely clinging to this head and shoulders, and if that head gets closed out today, then that's going to be negated. Like I mentioned, if everybody sees the pattern, it's not going to happen. And sure enough, that's what happened. And it happens many, many times with head and shoulders or inverted head and shoulders pattern. It's not that reliable as many people think it is. All right, so let's take a look at the 60-minute. And I just want to show you where we are here. Still have negative divergence. And now divergence could take a while to get played out as well, just like overbought, oversold. You could see here that we're really, really extended. We're breaking out here, but look what's happening. RSI has not. Look, from this move up, we had a nice big push up, you could see, but what's happening as we're making new highs or close to highs, we're not even getting close to the RSI where it was just a few weeks back. So negative divergence on a 60-minute chart. Let's see if that does play out, okay? I want to show you the transport. Before I show you the transports, I forgot to show you one more really important indicator. You've seen this before. The New York Stock Exchange advanced decline with volume, And I show this to you because I wanted to show this to you again. You could see when we had the February rip up, what has happened. We've making new highs on the indicator, and then sure enough, we made new highs. I mean the interim highs here, and we got up to this area, right? So what happens now? I've showed you this before: lower lows, lower highs, and even we had a 5, 6, 7 day rip. Look what's happening. We have no new highs. We're still making lower lows and lower highs. This is a very important indicator, guys. This is something that you need to keep an eye on. Now, if it could play catch up and start taking out new highs, that's great. But the internals of the market, the breadth of the market is lousy. It's terrible. So it's something that I want you to make sure you be aware of. Again, for day trading purposes, you follow the trend and that's it. And you look at price action. That's the best way to handle it. But you still need to know what the bigger picture is, because if the bigger picture analysis lines up with the intraday analysis, then you can use more leverage. Okay, transports, our leader, not leading, as you can see, another worrisome index. We're not doing anything. We had 6, 7 days of inside days. Now it could explode higher, but we have an M-top formation here. Target 127.17 still intact. Okay. Next is the IWM. Now, very unusual, but I had a head and shoulders here. I said, look, if it takes out the head, it's negated. I took it all off. It's definitely negated. Now, it had a 9-day rip for whatever reason. Again, funds, algos, they love it. They just want to rip it up. And now it's coming into heavy resistance as well. It still needs a lot of work before you could say that this is even bullish. It's making bullish price action, but we're into the heavy resistance area. Probably target will be here before we get a lower rip to the downside. And then we have diamonds. Again, not doing much, probably because of Apple. But again, 6, 7 days of going sideways. Nothing really to talk about here with the diamonds. But the Qs holding in here steady. Again, 4 or 5 days inside day. Trying to work off that overbought reading here. But again, we have to sit and wait. We'll see what happens to non-farm payrolls. Let's see what goes on here. Keep an eye on gold and crude oil and the dollar as well. Again, short video. I put out special edition videos on gold and crude oil. Check it out on the website. Have a great weekend, all, and I'll talk to you on Monday.